brief introduction to the Hive. A couple of you just asked me who the Hive was. Were we connected to Pivotal? No, we're not connected to Pivotal. We have some individuals who have relationships with the Hive from Pivotal. So we incubate and fund and launch companies that are in the data space. So we tend not to invest in infrastructure, but rather use cases and applications of data. Typically at the seed stage, where we invest between $1.5 million to $3 million in companies. We're very actively involved with them, so we have, you'll see later, we have a CTO, data scientist in residence, a chief architect, and then we have a number of different business people who work closely with these companies, getting them to kind of from inception to where the product or service is out in the market. Our focus tends to be on either functional areas or vertical segments. Overall, I would put sort of automobile transportation in sort of our effort around IoT and industrial controls. A lot of you probably read the news about Google yesterday, that Google is now getting a bunch of cars, self-driven cars manufactured in Detroit. There's a lot of interesting news around other transportation, trucking and so forth, and the use of data. So we see this as a very interesting area. The Hive team, so myself, my co-founder Sumant, typically work on the business side. Lance and Mohan, Lance is our CTO, Mohan is our chief architect, as well as Russell, work on the technology side, and then we have Craig, and we have some other individuals who have different domains of expertise. Thank you to Pashu for helping organize not only this event, but all the Hive Think Tank events, and we do them every week. This week we're doing 2 of them in either San Francisco or in the South Bay. And many of you probably met Erin, who takes care of all the operations, logistics, and culture for the Hive. The Hive hosts a number of companies, and as you can imagine, things can get unruly, so Erin takes care of those. Join us on social, be part of the community. Like us on Facebook, you'll see there's a lot of crazy stuff going on our Facebook page, so don't miss out. And be a part of the conversation today by using the hashtag HiveData, so hashtag HiveData. And with that, I'd like to, maybe what I'll do is just introduce Kimberly, and then all of you can come and introduce yourself. So we know Kimberly from before she was at IBM, and now she's, I guess, part of the practice that's around insurance and in the services business. And so welcome, and we're looking forward to this discussion.
Thank you.
Thank you, Pashu. And maybe while I'm sharing some slides about IBM, we'll have the panel members come to the couch here and get settled in. And then you'll be introducing yourselves next. So just wanted to say a few words about IBM, and certainly we're focused on the future of technology. And we have global research capability around the world. In fact, we have probably the most research centers in the world, as well as the most patents year after year. And we've been at the forefront of innovations that have helped shape our world. Going from the different eras of computing, from tabulating systems, where IBM started about 102 years ago, cognitive systems era. And certainly around a new environment all around big data. And Internet of Things is certainly a part of that, and we're seeing a lot of connections, and we're here to talk about that in a little more detail today. So at IBM, we're looking at generating systems of insight that drive future growth, which come from the systems of engagement and the systems of record in several different industries. So just to highlight one is the system of insight with Internet of Things that work together, and we're certainly doing a lot of research with our clients and coming out with new products and offerings every day. And some of you might be familiar with the journey to Watson, and Watson that won Jeopardy a couple of years back and ushers in the era of cognitive computing. And so we're seeing a lot of use cases around giving Watson the power to reason and understand natural language, and seeing a lot of use cases in all different industries. So with that, I'll turn it over to Mike to introduce himself.
Oh, I have my Madonna microphone here. I don't know how, I have no idea how to wear this, so is it on? Can you hear me any better?
Just pass this around.
Just use this? I'll use this.
Okay.
Okay. My name is Mike Simmons. I'm with Automatic Labs. I run business development for Automatic. And I'm not sure how many of you are familiar with Automatic, but we're a connected car company. A little bit about my background before I was at Automatic. I was the president of a company called Directed, which is best known for the Viper car alarms and Viper remote starters. So did a lot of stuff in the connected car space over the last several years at Directed. And one of the things I did there also was I was one of the co-founders of the joint venture between Directed and Octo Telematics, which Octo is the leading insurance telematics service provider kind of globally. And I help them. We work together to bring the Octo solution to the U.S. market. And I joined up with Automatic Labs a couple of months ago, because I had kind of an idea for how to really crack the code on the connected car when I was spending my time at Directed, and saw what Automatic did and said, that's it. So I wanted to jump on board. So we'll probably talk more about it as we go on, but it's a connected car device. It's a Bluetooth-enabled dongle that allows you to kind of turn any car into a connected car at a really compelling price point. So that's my story.
We're going to use those over the graphics?
Yeah, sure.
Yeah. I like pictures. Like I said. Oh, dragging my other mic. So we'll just go to the picture. I'm with a company called ATG Risk Solutions, and ATG is a new company which we just got started a few months ago. It came out of the pain that I endured over the last 4 years running the telematics program at Liberty Mutual. Of course, Octo Telematics was a great supplier for Liberty's program, but the problem is that you just didn't have enough data out there from all of the different suppliers when a customer came and said, well, I've already got an automatic device in my car, or I already have OnStar. How do I get credit for the fact that I have that data? The insurance industry is very good at fixing problems that exist. They aren't all that good at anticipating problems. And so earlier this year, an Accord standard came out that said, here's a basic data standard. And every conference that I went to, everybody said, I wish there were a standard for this data. And when I looked at the Accord standard, I realized it was woefully inadequate to do what we needed inside the insurance industry. So we put together ATG, and our efforts are really focused on making this simple for the insurance companies. Big ships, small rudders, can't deal with a lot of change. So the idea was every insurance equation and every insurance opportunity begins by them asking you one thing, right? What's the VIN number of your vehicle, right? And then what's the second thing they ask you? How many miles are on it? What they want to know is what's the original cost new, and then based on the miles, how much to depreciate that cost to figure out what price to charge for the insurance. So we've embedded ourselves as a clearinghouse right in that lookup process, and as a result, be able to provide security for the data for the individual business owner or to the individual being insured. Be able to provide a lot more information to the insurance company about where, when, and how the vehicle is being driven. And in the end, give the insurance industry a jump start to a data standard. This may not be the standard that they use, but the commercial industry, the commercial insured all needed something, and that's how ATG came to exist. Pass that along.
Hello everybody, my name is Sharon Rezai. I'm a founder of a startup company called LockX. LockX stands for Location Exchange, www.lockx.com. I received my PhD from UC Berkeley back in 2008 and started in 2006. I worked for a GPS company called eRide till just September of last year. I have experience around location, positioning, GPS, and anything that is related to location-based services. I started LockX as a startup company, as I mentioned, back in 2011. What we do is that we develop mobile phone applications, standalone mobile phone applications, to automatically measuring driving behavior in order to enable usage-based insurance. So the mobile phone app can be considered as a replacement for OBD dongle or as a complement to the OBD dongle. And as I said, it's the unique thing about that is it's automated, that the user doesn't need to define a start or another trade. Everything is automatically detected by the mobile phone app. We have both Android and iPhone app is available on Google Play and iTunes. Thank you.
Hi everyone, good evening. I'm Shobana Shankaran. I currently work as a business development consultant for California Casualty. And I'm mainly responsible for leading research on usage-based insurance, which is a company called UBI, and chartering a course for the company's UBI strategy and really driving their telematics strategy. I also lead our competitive intelligence function. A bit about my company. California Casualty is a direct-to-consumer personal lines auto and home insurer. Where a large portion of our business is in California, but we have a large geographical footprint in about 44 states in the country. We primarily serve the public service market. So our customers are public school teachers, higher education officials, law enforcement officers, the public safety markets, such as firefighters, as well as nurses. We just celebrated our centennial this year, so my current CEO's great-grandfather started a company 100 years ago, so we're a family-run company, and a little bit of a unique business model in that we have long-term relationships with the affinity groups in the markets that I mentioned to offer auto insurance. A bit more about my background. Prior to my current role, I was director of database marketing, responsible for marketing analytics at my firm. Before that, I worked at Esurance, which is now bought by Allstate, running their direct mail channel, direct mail marketing channel. And prior to that, as a product manager in some of the western states at Esurance, managing profit and loss, where I led their entry into the Oregon market. We contemplated entering Oregon with the telematics program, but back in 2006, 8 years ago, hardware was much more expensive, and UBI required professional installation. So at the time, it was actually cost prohibitive for the company to enter with the telematics program. So we decided to enter the Oregon market, but no UBI at that time. I started out my insurance career at Progressive, largely in analytical roles, primarily in insurance operations. So I'm going to bring you that perspective tonight. Thanks.
I'm going to move this over a little bit. All right, thank you everyone, and I appreciate you coming out tonight and all of you. And I just wondered, maybe by a show of hands, if you could indicate a little bit more about, who you are, so we can respond maybe with our questions that are aiming at you. But are any of you involved with machine-to-machine communication by a show of hands? How about from the insurance industry? Okay. And how about connected car industry? Okay, very good, thank you. So a little bit about my background as well. I come from insurance and started my career in insurance as a claims adjuster, and then worked in underwriting and in loss control. Climbed on everyone's roof in the Midwest, drove through the snow, all those kinds of things, and then started a company that was focused on subrogation, and sold that company and became a vendor in both BPO and in technology. In my previous role, I led the global telematics practice for Cognizant before coming to IBM last October. So my roles now include working with all of our telematics solutions that are around the world. We have a lot of different solutions that are geared towards different geographies, and I'm the offering manager around telematics solutions. So with that, we'll talk a little bit about what's happening in the Internet of Things and around UBI and around connected car. And certainly everyone's seen a lot more connectivity with the connected lifestyle, and now we're monitoring everything from the steps we take to the calories we burn to everything around us has some sort of sensor, and that certainly is no surprise that it's come into insurance, and now we're able to monitor driving behavior. So with that, I wanted to address our panel, and maybe Chris, you could take this first question. So with everything that's coming into the connected lifestyle, with connected cars, and now UBI in insurance, can you explain what exactly is insurance telematics and what's happening in the US marketplace around telematics?
A great question, and obviously a big space, because with the connectivity that we're seeing, there are tremendous improvements in the overall safety of the vehicles. There are some huge challenges still to recognize where that safety, that improved safety record is going to take us. But the telematics insurance space originally evolved from a simple equation, which was around just speeding, cornering, braking, and trying to determine who were the drivers who were demonstrating a basically safe behavior. I have a theory that says that if some of those early devices, all they did was beep every 30 days, we probably would have had the exact same selection benefit as what we have achieved with some of the early insurance telematics programs. But insurance telematics is really trying as a overall industry effort to establish what is safe driving behavior. And where we're trying to go with insurance telematics, I think in general, is not only on the underwriting side to identify who are the customers who deserve a better rate, but more importantly on the claims side is to try to do a better job of reducing the cost of processing claims and making sure at the end of the day that people are having a very positive experience with their insurance carrier. And insurance is all about a relationship, and insurance telematics is about improving the relationship between the insurance carrier and their client. And the tremendous amount of connectivity that's at hand, in some cases we're overreaching, trying to make it do more than our audience is ready for today. But insurance telematics at the end is about customer relationship.
Thanks, Chris. We have some graphs up here on what the consumer knows about telematics, and I'm going to ask Shobana to sort of walk us through some of the awareness and some of the challenges that we're seeing with UBI adoption from her perspective.
Despite all the money Progressive spends on snapshot ads, consumer awareness is still rather low. We have about 33% consumer awareness. This data is from a study conducted by LexisNexis, which is one of the telematics become more aware of the trade-offs between sharing data and getting both monetary and non-monetary benefits for this. We're seeing an increase in consumer awareness around UBI, but there's still a lot of room for improvement, and a large chunk of the pie chart here is actually either unaware or don't know. Next slide, Kim. Okay, so this is a study that Deloitte put together recently in the last month or so, their insurance vertical. And age, this is very intuitive. Age is a factor in terms of openness towards sharing data. As we see, the bars represent the percentage of consumers in each age bracket, the left-hand side being youngest, right-hand side oldest. The green box in the middle is the one to look at. The green box in the middle is no, I'm not willing to share, or I'm not willing to be tracked, is what that represents. And as we see that the older consumers are less likely to want to be monitored, is the key takeaway from this chart. This last slide is also from the LexisNexis study that I mentioned. And this is an interesting slide from an insurance perspective, because there are a lot of variables that go into insurance pricing, primarily socioeconomic characteristics, such as age, gender, marital status, where I live, where I drive, etc. But a lot of those variables are not very intuitive from a consumer standpoint in determining insurance premiums. So what this slide shows is breaking out the percentage of consumers and listing out the various factors that are used in insurance pricing. The left-hand side shows more acceptance for those factors being used in insurance pricing, and as you come down to the right, less and less acceptance. So for example, insurance premiums should be based on how much I drive, what my driving history was, what my violation history was. All that's very intuitive and acceptable. And that's why you see those variables on the left-hand side of the chart. I'm not sure how clearly you can actually read these sentences, but it's essentially driving record, the number of past violations, the number of claims, etc. are more accepted. As you get to the right, you'll start to see some more of the socioeconomic characteristics, like I mentioned, such as age, driving over the speed limit, which is still acceptable, but not predominantly used, and then miles driven, driving under the speed limit. And UBI is an opportunity for, in the insurance industry, to potentially replace some of the contentious variables that are used in pricing with real-time driving behavior data. So for example, credit scoring is one of the primary components that goes into an insurance pricing algorithm, because believe it or not, credit-based scores are highly predictive of risk. And we're also a very highly regulated industry. For example, California, which is a significant chunk of the US property casualty space. California makes up about 11% of our premiums nationwide, US industry-wide premiums, and California does not allow the usage of credit scoring in determining insurance rates. So insurance companies have to really figure out, what are the most predictive variables and what are the direct antecedents of risk, and UBI allows them a mechanism to do that. And so I might add here that credit is sort of one of the most contentious variables, and so if UBI can actually potentially try and replace that or provide enough predictive power in determining risk, then that's one way. But I think we have a long ways to go before we get there.
Thanks, Shobana. So, Shauram,
Yes.
what's the best way to collect data? Okay, can you tell us a little bit about the options?
Sure. So currently, most UBI programs, as you know, are implemented through embedded devices plugged into OBD2 port of the vehicle, so-called OBD dongles. Those are the most common solutions that currently exist. Aside from that, they are embedded. They are basically cars that are already connected to the network, like GM cars, OnStar, or some of the new cars that come in with other options. But basically, the connected cars, embedded devices, built-in basically connectivity within the vehicle. That's one option. OBD dongle is another option. Mobile phone app is the third option. And combination of mobile phone app and OBD dongle to me is the fourth option. Something that Automatic is doing, and that to me is the ideal solution, is the most favorite solution. Each one of these solutions comes with basically advantages and disadvantages, as we guessed. The built-in connectivity with the vehicles, there are 245 million passengers cars in the US. And as of today, only 10 million cars are connected. And out of these 10 million cars, only a fraction of those are actively connected to the network. It's projected that by 2020, I believe 90% of the new vehicles will be basically have built-in connectivity. But given the average lifetime of 10.8 years for vehicles in US, that means it would be 2025 or 2030 that majority of the vehicles will be connected. So that to me is not a viable option to do usage-based insurance. OBD dongle is great because it has the capability of reading the VIN number from the vehicle and thus be able to authenticate the vehicles, accurately detecting the driving behavior because it can have accelerometer inside the dongle, it can read the fuel level and all that stuff. But believe it or not, it's still expensive solutions for insurance companies. As some of us may know, insurance insurance industry is a very competitive industry in the US. Insurance companies on average make just 5 to 10% profit on the premium, and that corresponds to just $100 to $150 a year per driver. And the OBD dongle, especially if it's the way that's mostly done, that comes with a built-in GPS and built-in modem, that costs over $200 per year. It's just economical. Doesn't make sense for the insurance company to go with their solutions. Yeah, there are advantages that for the time when the drivers become safer, there will be less losses, and that would probably save the insurance companies. The mobile phone app solution is the ideal solution in terms of cost, but it comes with its own challenges. First, battery consumptions, how to differentiate the personal vehicle from the transit vehicle, accurately detecting the driving events while driving, other stuff. But as I said, I mean, the mobile phone app and the dongle, the combination of those, to me is the solution.
So Mike, so we have the connected car, and it seems like the OEMs have, their own agenda as far as technology and advances. How does this impact insurance, and are the two parties talking together?
Yeah, there's a lot of dialogue going on both between the OEMs and a lot of other parties in sort of the whole connected car ecosystem. So there's definitely a lot of dialogue going on. We're talking to a lot of the OEMs. One of the things that was, I was curious about when I started in automatic is, are the OEMs going to like what we're doing, right? Because the OBD port's a little bit controversial for the OEMs, right? Is it this? It's this that everybody's using it for a purpose that it wasn't really intended for. But what we found, to my it's good news, is the OEMs are they look very favorably on what we're doing in automatic, and I think it's because they're doing the cost benefit trade-off of saying there's security issues with letting other people into the OBD port and creating different experiences, but the trade-off is they can create some really cool experiences, and we can help companies like the OEMs or the insurance companies create new experiences and really interesting experiences around the connected car that couldn't exist before. And I think the conclusion that they're all coming to is that the benefits outweigh the costs. So I think it's gonna create over the near term. And I agree with your point. This opportunity is right now. The people want these experiences now. They're used to these experiences in their daily life when they're dealing with an iPhone and everything else around the Internet of Things. And the OEMs know that they can't wait for their the kind of the walled garden strategy of building their own connection to the customer, and whether it's a Ford platform or a GM platform, it just takes too long to get there. The opportunity is right now, so they need a platform approach that's more agnostic, something that you can enable all the 250 million cars on the road today, because it just takes too long to do it at the OEM level and get those cars out there. The ship will have sailed at that point.
Thanks, Mike. So with all of this change and all of this data out there, and insurance companies sort of maybe dipping their toe into it, some with some programs, some doing some pilots, what's the tipping point? What's going to happen in 2014, 2015? Looking right at you, Chris.
Well, I wish I knew, because I could certainly make a lot more money. But the bottom line is that it's a change that the insurance industry themselves are not really ready for, because usage-based insurance, as I alluded to before, is starting in a world of just speeding, cornering, braking, minimal amount of data. This is also part of a much more fundamental paradigm shift, whether we're talking about auto insurance, whether we're talking about homeowners insurance or the smart home. It's a much more fundamental shift away from looking at how do I price the aggregate, how do I price that large collection of risks, and in a traditional way to how do I precisely price your risk or your risk or your risk based on how you use that vehicle, how do we use our home, or do we have 27 undergraduates living in the basement. That's a big difference from a liability point of view than if if it's just my wife and I. So what does this mean for us? It means that as an industry, from an industry point of view, the insurance companies got to move faster. The good news is that all of the uncertainty, I think, around the progressive patents has now gone away. Liberty and Progressive went head-to-head, for those of you who don't know, and basically fought about those patents for about 2 years and tried to decide, are process patents really applicable in this industry, especially around big data processing? And the courts decided that the claims really were pretty much self-evident. So with that out of the way, now we're free to start innovating. Again, as I said earlier, these are big ships. They're not small rudders. They're not going to change course quickly.